Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. Alrighty, so first and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it now if you like, but that's the main point to take away. All right, so I'm pretty sure most of us out there are familiar with the Q&A process for this session. It is brief compared to the insiders meeting that takes place every Thursday for subscribers only, where there's a 45-minute Q&A portion. So obviously a much higher likelihood of getting your question addressed there. We certainly won't get through all the questions in this session, as again, the Q&A portion is brief. So take that as encouragement to attend the insiders meeting if we don't get to your question tonight. And also please know it has nothing to do with the validity. We just only have limited time. All right, so I mean, we had a quiet pullback day to start the holiday shortened week, and I'm curious as to what Rob thinks about that. And of course, very excited to interact with you all as always. So thank you for joining us for this live session. At this moment in time, I'll introduce the man of the hour, Rob Roy. How are we doing tonight, Rob?
Good, Zach. How are you?
Doing well. Feeling nice and refreshed after a holiday weekend, and ready to get back into some trading.
All right. Well, as you said, it was a bit of a quiet pullback day today with the doji, which makes it quite interesting. So we take a look at the moving averages, and you can say that, well, that was warranted. We had gotten a little bit overbought. We need a little bit of a pullback. Didn't even quite touch the 10-day moving average on the low, and basically ending where we started, which, as you know, is what a doji means. And if we take a look at the volume, it was a quiet day, both on the intraday volatility as well as volume, so below average volume on the movement today. So with the wave 3 underway, and note that with the labeling, we are just in this current wave 3. That's what we're looking at from a Elliott wave standpoint. And so this is constructive for the market to continue to the upside in this wave 3. You don't want to see it go too vertical. You've heard me say that over and over and over again. I know a lot of you watch these week in and week out, and I don't like vertical moves. I think everybody's very clear on that. So this little bit of a pullback, again, I think is very constructive. We do have this wave 3 zigzag pattern. We showed the other big zigzag that had already hit its target, and the complex C wave zigzag has also reached the 100% extension. So we want to see what's the likelihood of moving up to 161.8, noting that the 161.8% extension is dead smack right in the middle of this tap box. So the Elliott wave algorithm is liking this place right around 460 for some reason. And we like to look at our confirming indicators to see what the likelihood is of an extended move to the next fib level. So when we look at the DMI, you can see the ADX is right about 40 on the pullback. We did have the positive directional indicator move back down below that ADX. That's not so worrisome, but note that the negative directional indicator ticked up. So that's something to keep an eye on to see if perhaps there's a little more pullback to go, or if this is just simply correcting an overbought condition and we're ready to continue the move back to the upside. I like to look at the CCI as well for a shorter term indicator. It's moved down, so it's off of that what they consider to be an extreme point right up here around positive 200. So it's got a little bit of a room if it wants to turn and move back, but perhaps that CCI wants to move back towards zero. That happens as well. So we don't have a clear-cut picture as to whether or not this is just simply an overbought pullback. The low volume, I think, is the best indicator that we have that may have been what it is, and that there's nothing more to this than simply a low volume pullback from that vertical overbought condition moving into the holiday weekend. So pretty interesting to see tomorrow's trade with the doji today. Otherwise, I'd say, well, tomorrow doesn't mean that much. But with the fact that it's a doji, we could reverse and take off right back to the upside. Right now, the futures are up 2, so really nothing going on in the futures market. That's, I think we haven't looked at the weekly chart for a while, so I thought I'd go ahead and bring up the S&P weekly chart and note that there is not a 5-wave pattern currently in the weekly chart, which is interesting. And you can see the little doji to start the week with the fact that on the weekly chart, we are a bit overbought from the 10-day moving average as well. So this means corrective mode when you're looking at the weekly chart, and there's the corrective pattern that we had. This big triangle, we looked at this a while back, a number of weeks ago, where we were forming this triangle. That's a pretty clear upward breakout. So it seems that we may want to continue to the upside. And of course, there's a little arrow depicting where the 460 level was on the daily chart. And that's kind of where we're getting up towards resistance. The highs that we hit right at the end of 2021, early 2022. So are we going to go back and test those all-time highs? And we'll see. But it's, again, going to be a really interesting day tomorrow. I know I've said that a lot, but when you have a doji, it makes it even that much more interesting, in my opinion. Looking at the TNX, just consolidating here on the 10-year, we're right barely hanging on to that 5-wave to the downside pattern. Just the last bastion of fib support at the 78.6% fib level. You've heard me say this before, that if Elliott were here, he'd say this is likely going to become a disqualified pattern. But he also, I mean, he looks at the 23.6% level the same way. He doesn't really like that as far as a good indicator of a corrective move. He'd prefer to see a corrective move go to 38.2. And he also would prefer to see the wave 4 stop before 70% rather than going to 70% or above. Again, though, he acknowledges that they're fib levels and you have to take those into account. So this won't become disqualified unless something significant happens within the algorithm. You know, who knows what's all in that mathematical algorithm, but a break above 39 surely disqualifies this pattern on the TNX. But quiet and, you know, a little bit of a bump up on the Fed announcement, but nothing much since then. I find that kind of interesting. There's a little bit of support, not a ton, right here at 37. So there's a pretty tight window here between 37 and 39 on the 10-year, and perhaps rates breaking out will be what tells us where that next move is in the S&P. We go back to the daily chart, just a reminder that since we are in a wave 3, the wave 4 has to start at some point in time. And so the question becomes, is that start sooner, or do we go up and hit 460 first before the pullback? Last thing I wanted to mention about the markets, talked about this last week. I think it bears repeating. Money managers are way underperforming what the market has done with they're calling it, what are they calling it? The Super 7 now. I think the 7 stocks that have been driving the market. We also commented that the equal weight S&P is only up about 3%, but the SPY is up over 20% this year. And so is there going to be a little chasing of performance into the end of June, end of quarter? They want their numbers to come closer to what's occurring in the market for their bonuses, etc. So if they're that underperforming, it wouldn't shock me to see one more run into the end of the month. Doesn't have to happen. It's just a thought. That's, you know, no big technical thing, just a little sidebar that sometimes occurs in the markets. So if there's cash on the sidelines with some of these money managers and their funds, then perhaps they put that to work. And then we'll look to the beginning of July to see perhaps more of an indication of when we get that wave 4 pullback. So lots of things to think about. Not a whole lot happening to start this week yet. So if we look at the dollar, a little bit of a tick up, but kind of a doji there too on the dollar, as you've noted, or as we noted last week, the 5-wave Elliott wave pattern went away, and we just now look for this support level at 101 on the dollar. It's just, this is concerning to me. I don't really understand why the dollar would be acting this way when the Fed has basically come out and their dot plots on the Fed fund futures is pricing in 2 more rate hikes. Why wouldn't that provide a little bit more support to the dollar. Today's move with that little doji, to me, again, is just a little bit of a correction from, you can see we had a doji there as well, from a little bit of an oversold condition in the dollar. There's a separation between where the dollar finished last week and the 10-day moving average. So today's action, very similar to what happened in the S&P, where we corrected down from being a little bit overbought. The dollar corrected up from being a little bit oversold. Nothing, no indication of what's going to happen from here, especially when we have that C wave. I love zigzags. There are only 3 waves. They're great indications of what can occur in short term, but it's at that 100% extension level. So that could be the end of it. That zigzag could be over and we could start the wave 4, or we could look to go to that extended C wave right there at that 460 level. But the DMI is getting into the area of the strongest part of the move is over. I always highlight this because, and the reason I say this over and over again, one, I mean, we've got people probably watching that have never watched this before, and welcome to everybody on all the different social media platforms that you may be watching us on. You know, taking a look at where things could go with the extensions and the DMI. When it says the strongest part of the move is over, that doesn't mean necessarily the entire move is over. If we go back and look at that S&P chart one more time, and then we get this ADX curl back down from 40, then we could look to say, hey, that wave 3 may be indeed finished. I think it's interesting that the wave 4 forecast, which is what it is. These lines are called tap boxes, time and price projections. Again, it's not saying the wave 4 is underway. It's saying if the wave 4 were to start, this is where you could expect some level of support, and it happens to coincide with the 50-day moving average. So there's an argument on the other side if you want. There's still an awful lot of people that are bearish, so I don't know that the sentiment has gotten bullish enough yet to say that this move is over. Usually when it's just everybody has thrown in the towel and said, yeah, the market's going higher. I don't know why, but I'm done being bearish. I'm just going to go with the market. When enough people say that, that's normally when the correction starts. And I'm not sure we're there yet from a sentiment standpoint. Speaking of sentiment, let's go ahead and take a look at the VIX real quick before we start looking at some of the other markets. And we're in this wave 5. We're finding a little bit of support down here in this 13.5, 14 range. It's a 55% extension on roughly a 38.2% wave 4 correction. So that could mean a wave 5 that extends down to the 61.8% level. One of our subscribers pointed that out in our insiders meeting last week, that we could have a little bit lower move in the VIX for that wave 5 to hit the 61.8% fib level. It's trying to hold here, though. So if we get some support here and the VIX starts to move back to the upside, then that may mean the wave 4 is underway. So consolidation here in the VIX, potentially a little bit more to the downside to that 61.8% level, but likely not a whole lot more. I don't think, without some sort of a bounce back to the upside. And we broke below this area in the 17-18 range that the VIX had been consolidating in for, as you can see, a number of months. Hard to imagine that we don't test that break at some point in the near future. Now, is that after July 1st? Very well could be. You could certainly make a case that the VIX goes a little bit lower, hits the 61.8% extension. We rally into the end of quarter for those money management firms so they can chase some performance here at the end of the quarter, and then everything changes. Perhaps then the VIX bounces, perhaps then we start the wave 4. I would be cautious if you're bearish on what could happen. It's no big technical thing. It's just a thought that perhaps we get one more little bit of a run into the end of the month. But we're at levels on either side where the market could go either direction. What do you do when you have this kind of a scenario? This is where you're quiet. This is where you wait. Let the market tell you what it's going to do. Let the pattern set up. We had that C wave that ran up. We hit the 100% extension. Are we going to go for an extension or correct? Let the market tell us. We don't need to guess. There's no reason to guess on which of those moves could occur from here. So looking at some of our other markets, the DIA, take a look at the diamonds. And we had been in that level between 330 and 340, broke above it. We did come all the way down to the 10-day moving average on the diamonds today, also right back down to 340. So this kind of goes along the line with what I was just talking about on the VIX, where we had all that support around 17 or 18. We broke it. Are we going to go back up and test it? Likely at some point in the not too distant future. So we broke above this level on 340 that had been resistance on the DIA for so long. Quick test here. So right back down to test it. We held the 10-day moving average barely, but closed just above the 10-day moving average and just above the 340 level. So you could argue that that's a very successful test as well. Nothing too nefarious going on there. So no real signal to start this holiday shortened week as to what's going to happen for the rest of the week. Looking at the Qs with this big wave 3, a little bit of a pullback here. Didn't quite pull back as close to the 10-day moving average as the SPY did. But as you know, these are the stocks that have been driving everything. And we're just getting a little bit vertical. I talked about this last week, talked about it Thursday night as well. I liked that 45-degree angle. That's the kind of move that holds. And then when you start to go vertical, that's the kind of retracement that you get. So once we do correct, I would look for the Qs to at least come back down to this 340 level here to correct that more vertical movement. Yes, we could go higher first, but when we do correct, I think we could look for that 340 level. The tap box is saying we could even go a little bit lower than that. And as you can see, there's another level of support down there at 320, and that happens to be right smack in the middle of that wave 4 forecast. So if you're bearish, stay cautious until the end of the month. If we were talking next week and things are pulled back significantly, then you're going to be saying, hey, well, you said to be cautious if we're bearish. And look, we've had this big move to the downside. It's just something to think about. Obviously, if we break the 10-day moving average on all of these with follow through, then you can look for more to the downside and forget the whole end of quarter thing. It's just, over the years you see things and it's just worth mentioning, I think, with the end of quarter window dressing, they call it. You may have heard that, end of quarter window dressing. That's what this would be if we had another run, little bit of a run right into the end of June and the end of the quarter. Look what happened on the IWM. So we'd call this Doji Day. Dojis everywhere. Here's one on the IWM as well. We didn't quite make it to 190. We got awfully close, but we traded below the 10-day moving average today and then rallied back up to, again, close right where we opened, right on top of the 10-day moving average and right at 185, which 185 isn't that meaningful. You know what the levels have been. You've been watching. 170 to 190 has been the trading range. So that moves that line up here. And then for a couple months, we tightened that range, and it was a smaller trading range between 170 and 180, but we've broken above that pretty solidly, and now we're just coming back down towards that 185 level. So tomorrow, when you have these kind of dojis, it does usually mean we had a quiet day to start the week, as Zach said, but I don't know that tomorrow is going to be as quiet. I think we'll get some sort of an indication of what we're going to do towards the end of the month tomorrow. Does this movement to the downside continue? We should come down and test 180 here on the IWM at some point because it was resistance for a while, and that's where the 50-day moving average is. So you can see all these levels. Once the market tells us which direction we're going to go, we know what the levels are to look for, whether it's to the upside or the downside. So just there's no reason to guess now. There's don't step out and you're just throwing caution to the wind. The market will tell us. So be patient, let the market tell us where we're going to go, and we'll figure it out from there. So that's the IWM. I did want to show you Bitcoin. Big movement today. Perhaps you saw that. We've talked, how long did we talk about this where we hadn't retraced any of this vertical move between 20,000, 27,000. We talked about this Thursday night in the insiders meeting as well, that we finally did get a little bit of retracement from that move. So far, we've held the wave 3 high. You all know about the halving thing that's coming up the first quarter of next year. We're in the time frame where The last few times that's happened, it's been a big run in Bitcoin. Was that what happened today? Is that the start of it? So follow through here. I know for those of you that may be joining us for the first time, it trades 24/7. I get it. This is right where it is now live. Always check what the live quote is before we start TradeFinder. However, it does give us an end-of-day print for end-of-day software programs such as this, which, by the way, you can find out more about this software at hubb.com. If you're interested in it, I think it's the best Elliott Wave software that exists. I've tried all the ones that I know to exist. Maybe there's some that I'm not aware of, but this one, I'd be using I'm a big Elliott Wave fan, so I would be using what I think is the best software, and I think this is it. So now we look like we're going to kind of run into a bit of consolidation through here. It's not major resistance, but it's a little bit of congestion here. It also happens to be where this point of this triangle was. That's meaningful. So we had this triangle. We broke to the upside. That vertical move got fully retraced. And now we've finally retraced some of that move from the 20,000 to 27,000. So I'm more comfortable with the fact that Bitcoin could go higher from here than I was with when there wasn't any retracement. As you know, I kept saying, you got to keep that in the back of your mind, that we haven't retraced that yet. And it wasn't necessarily, off to the races. It's interesting, all the triangles that have occurred here in Bitcoin recently. We had another one, so we broke out and came back down, retraced all of that one, formed another triangle, and then this one broke to the downside to come down and test that wave 3 high and retrace some of that vertical move. So again, I think we're free to move higher if Bitcoin wants to. Last comment on Bitcoin, we're slightly overbought right now away from the 10-day moving average. You don't necessarily want it. I mean, if you're long Bitcoin, of course you want it to go higher, but you don't really want it to break above this area where both of these points of the triangles occurred and where this congestion is when you're already overbought. The ideal scenario here, if you're long Bitcoin, is to consolidate a few days right here under this 28,500 level. Just go sideways, even if it pulls back a little bit, and then take off and break it. Build a little more energy and wait for it to a little more momentum to move to the upside. If it were to break vertically again, I'd be back to the same thing. You break a major point of support resistance, major moving average, break out of a triangle, whatever, and you move to an overbought or oversold condition, they tend not to hold. They tend to come back. So even if it were to break up above this level tomorrow, I would be a little concerned of, can it hold it? But that's pretty impressive, the move on Bitcoin. And it does beg the question, is this the beginning of that rally that's occurred every other time Bitcoin's gone through that whole halving process? So I wanted to show you that. I thought that would be interesting. Let's look at a couple international markets. The INDA, which, as you know, has been really performing well, and a little bit of coming back towards the 10-day moving average here. We ran up to resistance right at this area of 43, but it's in a wave 3. So looks like more to come here. So nice relabeling from wave 5 to wave 3. And look where we go here. If we were to go to where that wave 5 projection is, it happens to be at those same highs from November and December. So going back to test the highs from November and December takes us right to a price level that, for some reason, the Elliott Wave algorithm is labeling that as a potential price move. If you're wondering, well, it says wave 5. Well, when you're in a wave 3, the algorithm, again, likes this price. Now, if we were to start the wave 4 and we came back down and created the corrective move and then moved back to the upside, then that's the area that you would expect it to move to. But while you're still in the wave 3, the wave 3 can run to that level as well, because it's, again, some sort of a point where the algorithm likes. So it doesn't look like we're done with the INDA moving to the upside. And you look at the DMI, it'd be hard pressed to find a better setup. We have information in the education area on our website at EWOtrader.com. We talk about all these confirming indicators that we use in conjunction with Elliott Wave. And when you look at the DMI, the ADX moving to the upside between the two directional indicators, good separation between the two directional indicators. Those are the real basic rules on the DMI. So what it's telling us right now is that there's strength to this move. Note it's more of a 45-degree angle now, and the DMI is telling us it's likely to continue higher from here, where before we were talking about, we're getting to the point where the strongest part of the move is over. We're still in the strongest part of the move on the INDA. Looking at the EWG for Germany, which has also been pretty strong, as you know, since the October lows. And we're kind of ping-ponging. Notice that the ADX is showing consolidation, and that's what's been occurring for quite some time here now. After that big run on the EWG, we've gone through this consolidation area, coming back to the 10-day moving average here as well. So I'll take those off so that you can see the range that we've been consolidating in between 28 and 29. Pretty tight range on the EWG. Again, if you're trading the German market, no reason to guess. If we break below 28, perhaps we're on the way back down towards that previous 4, and that would be your price target. We're at a 76% extension here, and maybe we can break that and run to 100% extension. But if you break below 28, you start to look, where's the next downside target? If you break above 29, where's the next upside target? While we're in between 28 and 29, wait, pause. Let the market tell you which way we're going to go from here. And then I know a lot of you have been asking about the Japan market. You've probably been hearing on all the financial networks, this big move to the upside, but there's that vertical stuff that I don't like. So we came back down a little bit, which is healthy in my opinion. Didn't really want to see it trade below the 10-day moving average, but that vertical stuff, that's what I'm talking about. It just doesn't hold. We were too far from the 10-day moving average. We'd gone vertically. So that's what happens when you get that vertical move too far above the 10-day moving average. Perfect example of all the things I've just been talking about at the beginning of the session here. And this is why I mention it so often, because that happens a lot when you see vertical moves. So here we went with that nice run here on the 45-degree angle, and then we took off and went vertically to the upside. That's my concern with the Qs. Is the same thing going to happen, or is it not done yet? We'll find out in the next day or two, I think. I mean, it's the 20th already, so there's not that much time until the end of June. And then I think we take a look at where we are at that point in time, and we'll have a clear picture as well, I think, on whether we get some sort of a correction after that. The market has completely shaken off the fact that an extra Fed rate hike was priced in. Market didn't even flinch, just kept going. With the Super 7 or Superlative 7 or whatever. I mean, there's all kinds of different names that they're trying to come up for those big AI tech stocks that have been driving the market higher. So really interesting through all that kind of stuff. All right, so let's take a look at our case study considerations that we've identified in recent TradeFinders. You can go back and look. The history has been pretty darn good on the case study considerations that we've found here at TradeFinder over the years. And as you know, we have RIG, which is our long-term. We do have an alert on this as well for our alert subscribers, but it's out to November. So we're not looking for any sort of a short-term move here. It is in a qualified 5-wave to the downside pattern, but we haven't been able to break below this area here around 5.5. It's held. I do think based on, and we look for fundamentals to support technicals. We're not big technical or big fundamental traders, but when you have both fundamentals and technicals lining up, it can only be that much better. And we have a bit of a triangle forming here in this consolidation. So I would say that RIG is probably getting ready to move higher. They're taking some, the RIG count is moving up. They're taking some old rusted ones and putting them back into service. So perhaps the next earnings report that comes out kind of reflects that. And you can see the next earnings report is the 31st of July. So that may be what really propels RIG higher if our thesis of this being a good longer term position holds. So not so much of a trade here as it is longer term. And we go back and look at this tight range that we've been in. This is kind of like that arrow formation here where we've gone through this consolidation between 5.5 and 6.5. And then we have a symmetrical triangle. So it kind of looks like, it looks like the formation of an arrow there with the setup. A break below this support level may change the thesis. We may just back off of that and say, okay, well, the stock's telling us, at least the charts are something different than what our thesis is. But for now, we're going to give this one plenty of time, again, going all the way out to November. Then we had looked at Dow, which had this triangle pattern. This was the breakout day, and we had this big descending triangle. You can actually argue that there's a bit of a symmetrical triangle as well. So regardless of whether you look at that as a symmetrical triangle or a descending triangle, it was a triangle. Nonetheless, we did send this out as an alert to our alert subscribers, and you can see that it came down and then went back to the upside. And if you've been watching these, I'm someone that spends a lot of time looking at triangles. I think I've probably spent more research on triangles than a lot of traders have. So we have this big triangle, we have the smaller one here. So this consolidation, when you have what looked to be a downside breakout, which turned to be false, then it looked like we were going to break to the upside, which also turned out to be false. There's no such thing as two false breakouts of a triangle. What's occurring when you see that is the triangle is forming a larger triangle. So whether or not we had a descending or a symmetrical one there, Dow was saying we're not done consolidating and forming this triangle yet. And so here's what we went ahead and exited this. You can see here's the alert. It was at a loss, a small one, albeit it's an $87 loss. And we cited the fact that it had consolidated again. So every alert that goes out to our alert subscribers, and that's the difference between what we do here at TradeFinder and our alert system at ewotrader.com, is we send out alerts for entries and exits, any adjustments along the way as well. So we kind of guide you from beginning to end, rather than just saying, hey, here's a chart you might be interested in, have at it and figure out what you want to do. So that was our viewpoint here. Certainly not as much fun as the big winning trade that we had last week that we showed in our AI time strategy, but they're not all winners. And in this case, with the fact that it was telling us we're not done consolidating, we're just going to keep an eye on that. So we'll keep an eye on the consolidation pattern. But before I leave here, every one of our alerts that goes out at ewotrader.com has a page just like this. So if you're interested in the alert service, you can go there, ewotrader.com, read more about it, how it works, etc. But every single page has, every single alert has a page like this with all this information in it. The details on the entry, the details on the exit. And, it's kind of a no harm, no foul here. It hadn't really done much. A little bit of time decay. That's where the loss came from, because as you can see from the chart, we're pretty much exactly where we were when we looked at it the first time. And so we just formed a larger triangle. Perfect example of it. That's why I wanted to share that one with you for all those reasons that I just went through. But when you're looking at triangles, there's no such thing as two false breakouts. So it just formed a larger triangle. We'll keep an eye on it. If it starts to break out, then perhaps we'll just follow that from a directional standpoint. Or if it consolidates a few more days, then maybe we'll start to look at another strangle here. But as you can see, the ADX isn't low enough. So if you're wondering, well, why didn't you just roll it out to another strangle? Well, on top of the fact that we're consolidating, the ADX wasn't low enough. If that ADX had been down here around 12 again, probably would have just rolled it out and put another strangle on. But the ADX can come much lower. That's more time decay. So in this instance, the decision was, let's just wait, see if it forms a little bit longer. If we get another great entry for a strangle, we'll do that. Or if it breaks out sooner than that ADX coming down a lot lower, then we can just trade it directionally. So this is on the watch list. I'm not leaving this altogether, but that was the decision that we made at this point in time. And then looking at EMR, this was one that we identified for another strangle back on 5/23. And you can see clearly that we had this big descending triangle formed right there. It's not huge as far as the mouth of the triangle, but it's large in the few months that it went through. But that's a pretty nicely formed symmetrical triangle there, or excuse me, descending triangle, and we want to give that one time to break out, which it has. So there's your false downside breakout, and then a legit upside breakout here, and we're still above the 10-day moving average. We want to give it a chance to break above this area here. In this 87 range where these highs were. It got just a little bit overbought. Doji on this one as well. So break back above 87 tomorrow, and we're in great shape on that one. So we'll keep a close eye on perhaps an exit there, depending on what happens with this potential break above 87. And then on June 6th, we look at, this was a new one with this breakout on PRIM, and it broke out and it kind of consolidated. Note what happened today. It's pretty interesting. So we had this small symmetrical triangle, but Elliott always said, don't diss the small ones. You know, everybody likes to look at the big ones for breakouts, but the small ones work too. We broke to the downside, but then turned around and came back and were able to close back into the point of the triangle. So if you're long this, if you're looking for this to move to the upside, that's encouraging. That it didn't hold this downward move. Perhaps it was just coming down to give that 28 level a little bit of a look. We look at the moving averages, and we were able to get back above the 10-day moving average as well. So perhaps this one breaks higher and goes up towards that wave 5 target. So I think I would give this one a little bit more time, see what happens. It looked like earlier in the trading day, ooh, maybe this is time to exit this one, but that's why we talk about follow through so often. You have to have the second day of follow through day. We didn't even get one breakout day. It looked like it earlier, but didn't turn out that way. And then last week we looked at Group 1 automotive, and we were looking at that 240 level, and it's just trading right there. So really nothing has happened since last week. If we break below 240 with follow through, we would exit this one, but it hasn't. So it's holding right in that 240 level, closing right at 240 today. You look at the moving averages, we closed above the 10-day moving average. No reason to take this one off yet. Let's see if this consolidation here on the break above 240, which was what was so interesting about this. It broke above 240, it's consolidated. That's what you want to see for a stock that, you know, it got above the 10-day moving average. Let's go back and look at that, because this is the ideal scenario. It goes right along with what I've been talking about. So it broke above 240. It got above the 10-day moving average. That's when you don't want it to take off and run. The ideal scenario is for it to do exactly what it did: consolidate that move, gather energy, gather momentum, and then take another run. Maybe it doesn't. Maybe it comes down and creates the wave 4. But this is the action that you want once you break above a major moving average. You don't want it just to take off vertically. As I said, that normally gets retraced and doesn't hold. This is the kind of thing that can hold. This break above 240 with the consolidation, this could hold to move up to that wave 5 target there around 260. So looks pretty constructive still, I think, on GPI. All right, so let's see if we can find a case study consideration for tonight. And we go to our pre-computed scans. And as I mentioned, the software is from the Hub organization. Over here, you have these pre-computed ones, which basically already does the search for you. And so you just click on it and see what the results are. However, it does have the capability, if you have your own indicators that you want to create, your own search system, your own technical analysis system, and you want to test it, you can go back and back test it. You can create account values. You can create how much money you want to put in a trade. If you want to have a loss exit, you can do all those things and test your system. Over here, these ones that say EWO, for anyone that is an EWO alert subscriber and has this software, you get these searches as well, which are mine. These are the ones that I've created. And so let's see what the impulse looks like. There's 4 of them. And Take-Two Interactive is interesting. Boot Barn. And then Site is the landscape supply. It's interesting. Trex. So let's just take a look at these and see what they look like. See if we can find something here, perhaps for a continued upward move. That's not a bad start there on Trex. So let's take all this other stuff off. The CCI moving up. Good volume today on a day when the market had below average volume. This one had average volume. And we have the ADX curling. It's right at the 20 level. It had broken it, came back down, it's trying to break above it again. You have the positive directional indicator going up and the negative going down. That's supportive of that move. The 10-day moving average here. And so we could look to see this one break to new highs here. That's where we are at. That looks pretty interesting to me. But let's look at the other ones too, since there's only 4 to look at. Obviously, Take-Two Interactive in the news a lot. And then that big gap up, sideways move from there. Not as excited about that, but it did come back down here. You know, the DMI looks pretty interesting, but I like the other chart better. Let's see what boot looks like. Boot barn. So everybody go buy a pair of boots. I am assuming that's what this is. I'm not too familiar with it. That positive directional indicator ticking down is not exciting. I'm gonna put the CCI back on there because it looked like that was kind of maybe starting to roll over as well. Yeah, it's still got room to go back up if it wants to turn back up. The positive here is that even though the positive directional indicator went down, the negative went down as well. Remember the other chart where I was saying the concern was we had a downward move on a quiet day on the positive directional indicator, but the negative directional indicator ticked up. This one, a little bit of a pullback here, which is not what you want on an up day. You would have preferred to seen that positive directional indicator go higher. It didn't do that. And this one's in a 5-wave to the downside pattern, so I immediately scratch that. If Elliott wave doesn't agree with the confirming indicators, then there's no confirmation. So you immediately go away from that. Here's another one that looks pretty interesting. So I like the TREX, and I like this one as well. No 5-wave pattern, corrective mode here, and we're trying to break. Gosh, if we can have another higher close tomorrow, that DMI looks really constructive there. Again, that's about as good of a setup as you could see for continuation. And the rules still hold true though. We've broken above this area at 160. Look what happened the last 2 times. So we're going to put a contingency on this one. So we'll do the TREX as our official case study, and then we'll put contingency on this one because there we broke above 160 back on the 2nd of February, no follow through day, and it gave it back. We tested it, and then we went all the way back down to support all the way down here at the 130 level. And then we took another run, and we traded above it, couldn't close above it, no follow through, back down, but it did make a higher low. So that's a positive, a little bit of a higher low there. You could actually say that this is kind of a ascending triangle, but we don't have a low ADX. So that takes the strangle out of play, even though it is in a triangle pattern. So what I would say here is on the close, we got a little bit above the 10-day moving average. So we're looking for a follow through day tomorrow. So that's what the contingency is. That's what I was getting at, is if we can have a higher close tomorrow. So if we get a follow through of this break above 160 tomorrow, then this one's in clean air. And that's the racing analogy you may have heard me use in the past. Like when you're running out front, you're getting clean air. If you're running in the middle of the pack, you got the exhaust from all the other cars. You got all little pebbles coming off the tires. Engine doesn't perform as well when you're in the middle of the pack as it does when you're out front. So when you get a clean air break like that, especially when you have such a supportive DMI, this one could be really ready to take off and run, but it has to have the follow through day. So we need a higher close tomorrow. So I'd watch this one tomorrow, see what SITE does. And if it looks like it's going to close higher tomorrow, then I think we probably have a nice upward continuation here on SITE, but it has to have that follow through day. We don't jump the gun. So we're going to write down TREX to the upside is our official case study for this week. And then we're going to put SITE with I put a little asterisk. And yes, I still handwrite things. I know people have all kinds of fancy spreadsheets and everything else. One of the reasons that it's habit. I'm a creature of habit. I've been writing stuff down for over 25 years, likely not going to change, but also writing things down. You remember what you were looking at. I just think it's easier to keep fresh in your mind what you were looking at before. So SITE, if and that's the contingency if higher close tomorrow. So we'll put higher close on 621. So we have a higher close tomorrow, then I think that becomes an official case study for this week as well. If it doesn't, then we cross it off, it's off the charts. So the official TREX, perhaps SITE, depending on what it does tomorrow. So that's what I wanted to share with you tonight. Kind of right on time, Zach. That's pretty good to start the week. So with the time left, let's do some Q&A.
Absolutely. Yeah, it sounds great. I'm definitely excited to get into some Q&A. I've been looking forward to this for a full 24 hours with having the extended weekend there. So let's start out. We got a question from Stefan on the VIX. So regarding the VIX, how do you get support on an instrument that's not traded?
Well, you can trade the VIX, but it works. The VIX works just like any other. It's a chart. It's looking for patterns. That's what LA Wave is, pattern recognition. And so it has an LA Wave pattern. I don't trade the VIX anymore. I used to. Some of you have heard me say that I did extremely well way back in the day, trading the VIX when it was on the OEX, and then trading what the VIX was saying as far as trading the market. Then they switched it to the S&P 500. I haven't been able to figure out how to trade it. People back it with the VXN, other instruments that they create, multiple trades out of. I just look at it as an indication of what's going on from a volatility standpoint. What I think has been interesting about the VIX lately is we have had a couple of days where the VIX was up and the market was up. And that's how the VIX is supposed to work, right? I mean, we know that it's slangily called the fear indicator. And if the VIX goes down, normally the market's going up, and the VIX goes up, normally the market's going down. But it's supposed to be a volatility indicator. So if you have a volatile day to the upside, then the VIX technically should go up. It doesn't do that very often, but it has a couple times recently, which may just be because of the low area that we're in. But I do look at the patterns here. I don't trade the VIX anymore. I haven't been able to make it work, but I always look to see what the VIX is showing. It does give general information. It would be a big part of my trading plan back when it was on the OEX. It's not anymore. It's just one of the things that I look at kind of out of curiosity to see what's going on. But we get these sideways patterns. That's our blast off pattern, and took off vertically to the upside, consolidated, took off, consolidated, took off. So the basic technical patterns that we look at all come into play, in addition to Elliott Wave works on the VIX as well. Triangles, you look at a VIX and forms a triangle and it breaks out. So it's just another chart with patterns, and you're looking for identifiable patterns even on the VIX.
Thanks for that explanation there, Rob. All right, we got a lot of good symbols here, so I'm going to fire off as quick as possible.
Right. I'll try to be as brief as possible, which we all know is challenging for me.
Well, I will too. I'll try not to spend too much time with my banter and whatnot. So SLV, what happened with that today?
Yeah, I think the metals are getting awfully interesting again here, but with the dollar move, even though it was just a little bit of a move to the upside, that's enough to send the metals back down. We need that dollar to really get the breakout that I feel could be coming in the metals. I think need that dollar to go below 101. If the dollar were to break down that far, because you can see as the dollar was coming down, we got a little bit of a bid in SLV, only enough to get it up to resistance though. So it ran up to resistance, both from the highs that occurred back in December, in January, and then from the lows that were after it broke above it in April and May. So it ran up to that area, big point of support resistance right there, 22.5. That held, it came back down. Can it hold at 21? So as we've been talking about for a while here, keep an eye on the dollar. The dollar is going to tell you when it's time for the metals. And if we could break 101 to the downside on the dollar, then I think we have a really good trade on the metals. But we're just being patient and waiting to see what happens there. And then if we get some sort of a significant break back to the upside in the dollar, which I'm again confused on why it hasn't happened already. Perhaps the raising of the debt ceiling is taking its toll after all. You would think that wouldn't be a positive. But if we break below 21 on SLV, then we probably have a trade down here to test these lows back from March, and you would have enough room to put on a downside trade. But for the upside, not only do we have to break above 22.5, but I think we need, for a sustained upward move in the metals, the dollar to break below 101. Keep an eye on the dollar. That'll tell you what to do with the metals.
Next up, GLD and GOLD.
Okay, so we're going to go from silver to gold. It's going to be the same story. So everything, the song remains the same. And so it held 180 barely, but that's where the wave 3 high was. Again, the metals are going to be whatever happens with the dollar. Now, GOLD is Barrick Gold, so we're getting away from the silver ETF and the gold ETF to an actual gold company here with Barrick Gold, and it's kind of the same thing here. We're at an area of support, but that's ugly there, which is why I kind of want to stay with SLV or GLD. Even if the dollar were to break down, this would probably turn and move back higher. But then you're getting into the dynamics of what's going on with the individual companies, et cetera. Now, if you wanted to take some sort of a real speculative shot here, you could do that because if we are sitting at support here on 16 and we're a little bit oversold from the 10-day moving average, but it would be a quick trade for some sort of a bounce off 16, and it's going to probably run into resistance real quick at 17 and the 10-day moving average. So it'd be a short trade here. And then the opposite occurs. If we break below 16, then we're probably coming down here to test these lows from the end of last year around 14. So if you wanted to put on a speculative long, 16 is your stop. And if you want to put on a speculative short, 16 is your stop. If it were to break below 16, obviously it'd have to break 16 first, then you would go short. And if it bounced back above 16, you'd get out of your short. So 16 is key for either direction on GOLD.
KRE.
ARE?
KRE.
KRE. Okay. Yeah, that makes sense. I'll bring up the yield curve real quick because it's starting to approach 100 basis points again. The last time it did that was not good for the regional banks. That's when we had all the other news with the banks failing, et cetera. And you can see that, there's the 2-year way up here and the 10-year down here. We're getting awfully close to 100 basis points there. And that's bad news for the regional banks. At least it was last time. I think the Fed's lending window that I think I read was 500 million, I think, was lent out through that window. So that helped save, obviously, some of the regional banks. But is that going to be enough if we go to 100 basis point spread on the 2s and 10s again? Perhaps not. That might not be enough. They may be too far in trouble or too far upside down. They've had time to shore up their balance sheet. Perhaps they felt like, we had 100 basis point spread. We'd come down to, I think 43 was the low. May have thought, all right, well, that's over. Things are coming back into line. Maybe they didn't get their balance sheets where they needed to. And if we go back to 100 basis points, they're in trouble again. But it's something to watch. And breaking down from this area of resistance here around 45 is not a positive. Closing below the 10-day moving average. That future line is the 30-day. I look at that for the cross between the 10s, 30s, because that's what a lot of floor traders do. But I don't look at it as a major point of support resistance, just the cross between the 10 and 30. So the fact that it held that, I don't put any weight in that. I look more towards, can it hold this support level at 40? Seems like it may want to come down and try to test that. So there's some concerns there. whether or not we get that one last push to the upside going into the end of June or not, this is concerning. And if we break below 40, then what is it, Zach?
80 bar the door.
Yeah, very likely. We get 100 basis point spread. We break below 40 on the KRE, and that's not a good sign for the regional banks.
All right.
It's very concerning at this point on that.
Yes, indeed. Yes, indeed. And it's a bit, just have to take a deep breath looking at that one. Next up, we have a few requests for Oxy. Paul's got a good question around it, though, here. Big triangle has developed over past 6 months, and we are at the tip. Prices broken below the 10-day moving average with follow through. CMF and RSI are strong to downside. However, ADX is still consolidating at 12. Earnings have been getting lower and lower for the past 4 quarters.
Yeah, with oil had a down day today, so there goes Oxy with it. Can it follow through? Note the last 2 times. You're spot on with the triangle. Good spot on the descending triangle. So we broke below that 58 level, no follow through, got back above it. Broke below it, no follow through, got back. That's why these rules exist. That's why we say them week in and week out, to where I'm sure you're tired of hearing about it, but that's why, because they work. Does oil go down again tomorrow and we get follow through? Then Warren Buffett's not going to be very happy, because he loves this stock. And this is scary here because of how vertical that move went up. There's not a whole lot. If we were to break down below this area, you can see how far back this support area goes last summer. So if we get follow through tomorrow, we could be looking at more downside there, and that would be a confirmed downside breakout out of the triangle. Now, you mentioned the ADX as well, and look how low the ADX went. The ADX got down right at 10, actually just a little below 10. And it's starting to curl up. This is the analogy that I use when you have a triangle like this. You're consolidating, not a whole lot's going on with the stock, but the ADX has come down very low. It's already triggered. That's enough of a trigger for a strangle, in my opinion. And then this tick up, that's when, is lava bubbling underneath a volcano. Looks calm and peaceful at the top, but we don't know what's going on underneath. I think that's the same thing that occurs when the ADX starts to tick up. Especially when we've got this bearish cross here between the directional indicators there. Could be indicating a bit more follow through this time. We'll find out tomorrow. Tomorrow will be the key. If it gets back up here, then you wait again and wait for it to break out. But the fact that the ADX has ticked up, it already did its thing, in my opinion, getting down to 10, and you can see how it broke levels through here. That's how strong the consolidation was. So I think you're onto something here. Whether or not you just trade it to the downside if there's follow through, or if it gets back into this triangle, a strangle, I think makes a lot of sense on that one. So good spot.
All right, let's go with TAN, and then I got 4 fun ones to finish with.
Okay. Solar, well, you gotta love the symbol, right? TAN for a solar stock. So you look here at support. This one has this is almost too long in the formation. It's a very large descending triangle, but you like it when it's 3 to 4 months in the formation. When it goes further than that, sometimes it means that the breakout is going to take a while. And that's the difficult thing when you're buying a call and buying a put, because time decay becomes an issue. So this took longer to form than I'd be comfortable with. We're just kind of we did break below it there though. But the length of the formation here, this one, unlike what I just said with Oxy, where I'd say, hey, if it gets back in the triangle, look at a strangle. This one I would let break out. Either break below 70 or break above this upper trend line and trade this one directionally, because it's just the triangle took way too long to form, in my opinion. So I would look for this one, keep an eye on it, and trade it directionally depending on what way it breaks with follow through out of this descending triangle. And that's what's next. You got to unmute yourself there, Zach.
I left myself unmuted the whole time, and just
okay.
About it.
I know you're doing 18 things at once, but
yeah, well, I started typing and stuff, so I didn't want to be too loud. Zoom.
Boy, here's a blast from the past, right? Oh, ZM, right?
Yeah, absolutely.
And I remember when people talked about this stock every single day, and then it's done nothing for a while. It's trying to break higher, which is really interesting. It's still in a qualified 5-wave to the downside pattern, and Elliott would be all over that 70% wave 4 of saying you got to watch for that to become disqualified. And we closed above 70. Once again, can we get follow through? Because we broke above 70 back here in May, no follow through. Does it follow through tomorrow? So if we get a higher close here tomorrow, then I think you've got something perhaps to the upside. If you wanted to be super technical, you would want to wait for that wave 4 to go away. But I feel like if we do get a higher close tomorrow, because 70 is such a point of support resistance, the likelihood is the Elliott wave pattern will disqualify, and you could be in a little bit earlier. So with follow through tomorrow, it looks like we have a trade up to 80. And then we'd have to relook at it because there's a lot of resistance at 80, but it's got some room here between 70 and 80 if you get a higher close tomorrow.
USO.
Yeah, there's oil. So we were talking about that with Oxy. So here's the chart on oil. And so it closed near the high of the day, even though it was still down on the day. And it's trying to hold in this range. It did manage to get back above the 10-day moving average. So, that could thwart the downward move in Oxy as well. If the USO can get back. So it needs to it's got a small descending triangle here. It's not very large, but we're at the upper trend line, the lower highs. So if we could break above that with follow through, so I think you need 2 more days here on USO to the upside. So a break above this trend line and a follow through day after that, then perhaps oil's got a bid again, and that holds that potential downward breakout of Oxy, probably negates that and starts looking for, perhaps a strangle again there.
All right, 2 more symbols for you. Is that all right, sir?
Sure.
All right. Second to last one is going to be Tesla.
Is this yours, or is NVIDIA going to be the last one?
No, it's not. I can't do that so many weeks in a row, but I had a lot of help in the chat, and you know who you are.
Yeah, well, Tesla's just been a monster, hasn't it? Because now Rivian is going to use their charging stations too. So like everybody's going to use Tesla's charging station. They had 13 days in a row, which set a record, and which was amazing considering what Tesla's done over time. It had never done that before. Took a little break for a day or two, but not much of one. And now we're back above 260. It's hard to imagine it not going to 300 at this point. It is a little overbought right now, so perhaps it needs to come back down and test breaking of 260, because you can see that was support back in September and it broke it. So we're back above it. Is it going to be support again? That would be ideal, in my opinion. Come back down and test 260 and hold it and break, and then I think you got your run to 300. But the way Tesla's been acting, even though it's a little bit overbought right now, it could run to 300 before it gets to consolidating that overbought condition. So hard to imagine Tesla not hitting 300 at this point.
All righty, and I figured we'd wrap tonight's session up with a fun one, end on a fun note. Please, everyone out there, if you've enjoyed this webinar, don't forget to smash that like button. It goes a long way, and we do appreciate it. And if we didn't get to your question, hopefully we'll see you on the insiders meeting later this week, and we'll be able to interact again there. So over to you, Rob, to wrap things up for the evening. AMD.
The blast from the past, right? The one that came up week after week after week and then disappeared, and now it's back. And so look at that's not the doji you want, though, underneath the 10-day moving average. So yeah, it's doji day. Doji's everywhere, perhaps along with the market. Coming back down, maybe it needs to come fill this gap first before it turns back, but it's below the 10-day moving average now 2 days in a row. So it followed through below that, which means you have to respect the possibility that we're going to fill this gap before breaking back above 120. But if it can break above 120 with a follow through day, then it is probably off and running again. But because it's had 2 days below the 10-day moving average and it broke below 120, I think you have to respect that it may want to come fill this gap before it goes further. You look at the DMI and see it's rolling down from 40. That's not what you want. this is the indication of that part of the move is over. So that tells you that we probably are going to come down and fill that gap first. So, you know, the ADX can turn around, but that look, the DMI is suggestive that we are going to come fill this gap first. However, last comment, if it can break back above 120 with a follow through day, you can go long then on AMD. But that's what you need, especially when you have the DMI that's flashing massive yellow caution lights right there. Thanks, everybody. As always, say the same thing. Very passionate about it, mean it deeply. Time's the most valuable asset we all have. We very much appreciate it when you devote some of your valuable time to us. And we try to make this as informative and educational use of your time as we can. I still don't get the whole smash the like button. Why would everybody want to break their keyboards? They hit the like button. But I know smash is that's the vogue word that everybody uses right now. But it's I don't know. Anyway, just trying to end with a little bit of humor there. Have a great rest of your week.